Hi there folks, welcome to this week's weekly Forex forecast, Monday the 11th of April. Really busy week we've got in store this week in terms of economic data. Lots to play for, lots of opportunities, a shortened week for many as well. Now in order to access the weekly Forex forecast, head over to the ForexSignals.com website. You'll see the landing page there. If you scroll right down to the bottom, you'll see all our gizmos, bells and whistles and so forth. Click on Forex Forecast. Up will pull up this landing page here. Now, if you want to get this sent directly to your inbox, just pop your details in there. The moment it's been released, you'll get sent the report. Otherwise, you can just come here to the site and access it here. Okay, so let's have a quick look what we're looking at this week. Max is back. He's looking at Bitcoin. He's turning bearish on Bitcoin. He's looking at target level down there at 39.50. And his reasons are there as well. I'm looking this week at the euro yen. Now the yen has kicked off the week in negative territory. The euro is getting bid, bought. It's basically getting you excited now about potential for rate hikes further down the line. So that is now seeing that yield differential play push that currency higher. You check it out there as well. Now, if you want to get an overview of what's going to come out this week, again, here's where you get the report. Basically, Shane goes through day by day, looking at each day and the key takeouts of what you should be looking at from the fundamental standpoint. Right, let's jump onto the charts now. Look at the currency strength meter, see what's strong, see what's weak, and also look at some support and resistance on some key currency pairs. Come on, let's go. Okay, so as always, let's start off by looking at the faithful momentum meter. This basically tells me what currencies are currently strong, basically the currencies that are being bought, and what currencies are being sold, the weaker currencies. Now, typically, anything below the line is a softer, weaker currency. Anything above the line is a stronger currency. But also it's important to look at the trajectory of the line. Is it heading up in an angle? Is it heading down in an angle? Not just its location. Also, I like to look at this panel here. This basically looks at all the different time periods. So you can see here at the moment, the British pound is blue across the board. So is the euro. That's just basically showing you it's strong across all of the different time frames. But look here. So on the chart here, you'll see this notable brown line. This is the Japanese yen. And it shows you here that the Japanese yen is the softer currency. So this is Monday morning. The markets have opened now for about 12 hours and the Japanese yen is in decline. So if you're looking to follow trends, then clearly buying currencies against the Japanese yen maybe has the slight edge. And here at the moment you can see the biggest edge out there for this current period is the euro against the Japanese yen. You see the euro, this blue line here at the moment, that's going up at a 45-degree angle, and you've got the Japanese yen coming down at a 45-degree angle. So maybe there's a bit of an edge to play in there at the moment. Of course, you can toggle this between the different time periods. This is the 4-hour, but if you want to use this on, say, a scalp, where you may be on the lower time frame, the 5-minute or the 15-minute chart, you can drop that down, say, to the 15-minute chart as well, to give you a clue what's moving at this moment in time. I think it's invaluable if you're looking to trade the lower time frames as well. Maybe you use it in conjunction with the higher time frame. So you maybe have two of these momentum meters on your chart at the same time, looking for the overall trend on the higher time frame and looking for the entries on the lower time frame chart. You can also take it out to the monthly as well. Shows you the monthly here, Japanese yen, still a very, very soft currency, predominantly because of the yield differentials that you're seeing there. Negative interest rates in Japan and positive interest rates, of course, the rest of the currencies. And that's the daily and back to the 4. I like to use the 4-hour really as a good guide. You see at the moment the Swiss franc is performing quite strong, but this green line here, this is the US dollar. The US dollar has been trading higher. Obviously, the Fed have started to move their interest rates now as well, and are getting more hawkish by the day. So there's money flowing still into the US dollar. Now let's have a quick look at a couple of charts. I'll just show you how I draw support and resistance. I think it's really important that you do this at the beginning of the week, maybe on a Sunday if your family permits, to plan out the week ahead, just plotting in the key levels of support and resistance. And if your profit targets are through those levels, well, maybe you should hang back and not take that trade. Remember, trading is all about having an edge, taking those high probability setups. Trading support and resistance is a key way of doing that. So typically I have my charts set out like this. I have the higher time frame on the right, that's the daily. I've got the 4 hour in the middle, and then the 1 hour on the left hand side of the screen. So I want to plot support and resistance on the daily time frame. Now, the best way to do this, I think, is by removing all the noise. These candles show the high, the low, and the close, and what have you. But having that high and low removed removes that noise. I want to know who won the battle on the trading day. The key levels are basically the closing price for me. The way to do that is pulling up the line chart. Now, the line chart basically does take out those highs and lows, just focuses on the close. I'm looking for those big V shapes or those big A shapes or levels that have been respected more than once. And of course, you see one straight in there at the moment. I like to use different colors as well. If I want to put these on the weekly, just put them on with a different color, and then you can see exactly what you have plotted there. There's definitely one in there as well. And of course, there are some up here, but that will be getting up there this week as well. But doing this, as I say, once a week, just to update your charts for the for the week ahead, is a valuable way to basically improve your win-loss ratio. Then you can go back to the candlestick chart, and it becomes a lot clearer. Now, of course, there's no real support coming in here at the moment, so I would need to go out maybe to the weekly to see where those levels will be. Let's just select the weekly to the downside. The same applies. I'm going to go to the line chart. On this occasion, I'm going to change the color of the line because it is the weekly, and I will be having my weekly levels now. Basically, there's one in there, I would say. Okay, so one goes in there, and you've obviously got some levels, I would say, well, there's certainly one down there. Now, the idea when you're doing this is not to plot too many. I've seen some charts when there's so many lines on the chart, you can't trade at all because of the over plotting of the support and resistance. So just the key levels is what you need. So, for example, if I'm selling now and I've got a trade set up, and I have a profit target through 129.15, that's a key level on the weekly. I'm not going to take that trade. I'll leave that for others. Indeed, it may hold as support, it may not, but for me, I want the high probability trades only. So do this on all the currency pairs that you're trading at the beginning of the week. I think you'll find an invaluable exercise. Now let's look at the economic calendar for the week ahead. Lots out this week. Come on. Okay, so head over to the ForexSignals.com website. As with the report, just scroll right down to the bottom and you'll see the Forex economic calendar, a view calendar. This is free, of course. Now, it's color-coded here. Down the right-hand side of the screen, anything in red is deemed to be high-impact news. Anything in yellow is medium, and green is low-impact data. Now, even if you're not trading the news, I do think it's important that you know what's coming out for the week ahead. Certainly, you don't want to be taking trades right into a big news event unless, of course, that is your strategy. Last thing you want to do is get stopped out before you even have a chance to book the trade. So being aware of what's coming out really, really is important. So this morning we had some industrial production manufacturing numbers out of the UK. Quite a miss on some of these numbers as well. You'll see industrial production month on month down 0.6. Market was expecting up 0.4. That's all come out. How normally it would work is if you see a read that's way away from where the market was expecting, that's when the currency maybe should move. Okay, so we're just scrolling out throughout the week here to see what is coming out. This is the 11th. If you want to take it out to the next 7 days, you can do so just by going like that. In fact, let's have a look at Tuesday first. The 12th, we've got harmonized consumer price index out of Germany. That's normally quite a big read. We've got some key data out of the UK tomorrow. That's the average earnings and also the claimant count, basically unemployment. So that's an important release tomorrow. We've got the ECB bank lending survey, and that's worth paying attention to. In the US, we've got CPI, that is inflation, stands for Consumer Price Index. As we know, central bankers around the world, they are mandated to keep inflation at around 2%. 2%. Look at inflation at the moment. The market expectations are 8.5% for inflation. 8.5%. 2% is their mandate. That's why they're moving interest rates at the rapid pace that you're seeing out there at the moment. One of the reasons why the dollar is getting stronger, because this inflation number, it seems to be out of control. So keep an eye on that. That's interesting to see if it beats these expectations or indeed misses again to the upside. And then looking out for the next 7 days, we've got the RBNZ rate statement. Remember, the RBA, they have been moving interest rates recently. They're one of the first ones to start moving interest rates. Markets are going for a rate hike of 0.25. You see the last under previous was 1%. Market expectations are 1.25, so that's an increase of 0.25%. So we'll see indeed what happens there. And of course, the follow-on statement is equally important as well. Gives us clues on what we think is going to happen. Later on, we've also got CPI out of the UK. That's inflation numbers in the UK. So that's coming for 6.7% is what they're expecting, a rise of 0.5 from last month. Again, remember, all central bankers are looking at these inflation numbers to gauge whether they're going to move their interest rates and how fast they're going to move their interest rates to combat the higher price inflation that you're seeing. We've also got the Bank of Canada rate decision as well. We're looking for a rate hike this month out of Canada. How can you tell? Well, because last month was 0.5, market expectations are 1%, so that's an increase of 0.5% markets are expecting. Of course, if they don't raise interest rates, then you can expect to see the Canadian dollar come under pressure. If they do raise interest rates and then talk up the sort of the flight path, if you like, for the interest rates going forward, then that could push the Canadian dollar higher as well. So very, very important week in terms of rate decisions at RBNZ and Bank of Canada. And you've got the press conference there as well. You've got employment out of Australia, very important for the Australian economy. We'll see what's going on there. There is talk, of course, now that the Australians may have to move their interest rates sooner rather than later. There could be a clue here. If the employment numbers are really strong, then that maybe will accelerate any potential move in interest rates. So the Australian dollar could come under some support this week. And then we've got the ECB rate decision on Thursday as well. Not likely to move interest rates, but all eyes again will be on what they do in terms of their forward guidance. So the forward statement basically telling you about their sort of views on unwinding of their stimulus and so forth. So the press conferences is very, very important. And that's about it. Good Friday is this week, so many of the markets are closed. So that's if you're celebrating that, have a good Easter holiday with your families and so forth if you celebrate. Okay, that's about it for this week. So I hope you found that useful. Don't forget, you can pop your details in there, and that way you get the report the moment it has been released. Now, we are streaming live around the clock, up to 7 times a day. If you want to take part in that, you can do so. Just head over to ForexSignals.com, take out a 7-day free trial, see what it's all about. You can engage with us, talk to us one-to-one as well. Any of us and my fellow mentors will be only too happy to help. We discuss strategy, looking for trade ideas, setups, and so forth. We've got a vibrant community of like-minded traders. If that's not your thing, that is not a problem. Don't forget, of course, to subscribe to the channel here on YouTube, and that bell notification will notify you the moment the next video has been released, which is a couple of times a week. You can follow us on all the socials as per usual. Okay, that's about it for this week. I'll see you next week. Have a good week.